Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Dear guests, welcome to our second Focus On conference. My name is Philipp von Restorff, Deputy CEO of Luxembourg for Finance and your Master of Ceremony. Today, we will focus on Switzerland and on how Luxembourg is a European Union hub for Swiss wealth managers. Our three panels will discuss the different solutions Luxembourg offers in wealth management, different trends in wealth structuration, as well as the Luxembourg life insurance. During each panel, you will have the opportunity to ask your questions. The panelists will then address at the end of the panel. You can do so by scrolling down on your web browser. At each panel also, we will ask you one question, dear audience, and you can access this question also by scrolling down to the end of this very web page. Now, before kicking off the panel sessions, I have the honor to give the floor to His Excellency Pierre Gramegna, Luxembourg Minister of Finance.
Excellencies, ladies and gentlemen, welcome to the first virtual Luxembourg for Finance roadshow. I would have preferred to all see you alive in a conference room, but COVID has decided differently. So let's make the best out of it and be professional and continue to work together. The relationship between Switzerland and Luxembourg deserves that we focus on it on a regular basis. And so instead of coming to see you, we're going to do this through the internet and through the camera. Switzerland and Luxembourg have a very strong bilateral relationship in many ways, and particularly obviously in the financial services sector. The contingent of Swiss banks is the fourth largest with 13 members, and the asset managers of Swiss origin are in the top 3 in Luxembourg. So our bilateral relationship is extremely important. I have also recently met again my good friend Willy Maurer at the meeting of German-speaking finance ministers in Vienna a couple of weeks ago. And we could exchange notes, compare experiences, and noticed that both countries had reacted in quite a similar way to the pandemic. Meaning that basically we had to mobilize lots amounts of money to make sure that we could amortize the shock of the partial lockdown that has hit most economies in Europe and basically also around the world. The latest figures of the OECD show that the shrinking of the GDP will be a little bit less than expected during 2020, but that the upswing in 2021 is also going to be a little bit less than expected. One way or the other, I think basically we will have 2 difficult years, 2020 and 2021, with very little growth. That is quite a challenge for any country, and Luxembourg is no exception. We have, from our statistical office, the news that normally we would have a downturn of roughly 6% of GDP this year and an upswing of 7% next year. This is better than the average of the OECD, better than the average of the European Union, and that is thanks to the fact that the banking sector and financial services, the fund industry, insurance, have been able to work quite well during this period through remote labor. We have also been able to mobilize 11% of GDP for measures that would help people come through the crisis, and that would also help enterprises come through the crisis. By doing so, we are one of the EU member countries that has done most to alleviate the pressure. But coming now to the financial sector and the perspectives, I think it is important to realize that we are in this crisis together. It is a symmetric crisis, and we need to deliver answers together. In the first weeks of the crisis, Europe was quite absent, but starting from April and a successful Eurogroup after 2 nights of negotiations, the European Union came up with a lot of solidarity, meaning that we decided on a safety net of 540 billion euros, and this safety net is in fact a collaborative effort that the European Union is doing together with the European Stability Mechanism, the European Investment Bank, and by setting up the SURE system, which is a way to finance short labor. In that same meeting, we decided the principle of the EU Recovery Fund that was then finally decided in July by the heads of state and prime ministers of Europe, mobilizing 750 billion euro for this recovery fund, the next generation EU budget. Because to all these amounts of money, which are, I think, without comparison, there is an EU budget for the next 7 years of over 1 trillion euro. What is going to be done with that money? And I think it's easy to realize that it's key that we should monitor how that money is used, and that it should be catered to the needs of the economy and be focused towards 2 priorities. Sustainability in terms of environment on the one hand, and the digital priority on the other. European Commission has announced already a couple of months ago the EU Green New Deal as a priority, and President of the Commission, Ursula von der Leyen, has confirmed a couple of days ago that out of the 750 billion of the recovery fund, 30% is going to be mobilized through green bonds. This is exactly what Europe needs. This is also an important message for capital markets, that the European Union is serious about green bonds, is serious about sustainability and about climate change. And this is one way of doing it. In the same way, Luxembourg is very serious about sustainability and green bonds. Our stock exchange, the Luxembourg Green Exchange, is already listing more than 50% of all green bonds in the world. We will continue in that direction. The Luxembourg government has been the first in the world to set up a framework for sustainability bonds, which we announced a couple of weeks ago. And in the aftermath of this announcement, we have also launched the first sustainability bond of 1.5 billion euro, which we were able to issue very easily and which received a lot of success in the market as it was oversubscribed more than 10 times. It shows that the market is expecting such products, and we're very pleased that we're the very first country in the world to have a framework now that is compatible with the latest standards, including the ones of the EU directives that are known under the code name of taxonomy. So for you, that means that customers, investors, will in the future certainly look for more such products. Digitalization is the other big topic, is the other priority in which we should invest. And if we look at what has happened in the crisis, the big winners is e-commerce and the companies that can provide that. So that means that we will need digitalization even more tomorrow than today. In our country, Luxembourg, for example, the digital traffic, the IT usage has been multiplied by 3 in a matter of a few weeks. And our system, our data centers, our fiber optics network, the internet has functioned perfectly during this time. It shows that these investments are key for a financial center as ours. Last but not least, We have realized during this COVID crisis that we have something that is extremely precious and that we need to preserve by any means and that we need to continue to develop, that is the EU single market. The EU single market has worked rather well for goods and services and also for financial services. Unfortunately, it has not worked so well for the movement of people. You could say that in that area the free movement was quite patchy. I would say like a Swiss cheese of Gruyere. We need to work on that. We also need to work on that between Switzerland and Europe. We need common criteria in this area so that if restrictions are taken, they are based on common standards. But beyond this, let's face it, the capital markets union on the one hand, the banking union will continue to be at the heart of our endeavors to continue the progress that we are making in this area. The pan-European personal pension product that has been launched is a good example of something that will certainly entail new possibilities, new perspectives for all players. I hope this introduction will bode well for the whole conference, and I have looked at the program. I'm sure that you're going to learn a lot during this conference. I wish to the conference and to all participants and speakers a lot of success.
Thank you, Your Excellency, for these kind words and your insights. Now, with further ado, I would like to kick off the first panel session on the different solution Luxembourg has to offer in terms of wealth management. And I will give the floor to the moderator, Christian Kremer, Senior Partner of Clifford & Chance, Luxembourg. Du guckst du hin.
Ladies and gentlemen, welcome to our first panel discussion. I'm very pleased to be here. I would be even more pleased to be in Switzerland, but times are the way they are, so we will come back as soon as circumstances will permit. So I have a very experienced panel around me, so I will immediately pass the floor to them after some introductory words. First of all, let me introduce the panel. Jeff Mouton. Jeff is head of intermediaries at Banque Julius Baer Europe in Luxembourg. Jeff is based in Luxembourg, has over 25 years of experience. And in our panel discussion, we are going to cover the more broad reasons why Swiss wealth managers would choose Luxembourg. Then turning to Stéphane Ries, my immediate left. He's head of business development at Quintet. Also many years of experience, 20, 25, maybe 30, but a lot. And you have a lot of experience in particular in the area of asset servicing. So we're going to cover the asset servicing side of things, what Luxembourg has to offer, what trends you see in this industry. Last but not least, based in Geneva, Stanislas, who is not present physically, but virtually and with his heart. Global Head of Wealth Planning at Lombard. Odier, thank you for being here with us today. Stanislas is going to cover the wealth planning side of things. Now, before I'm starting with a very brief introduction, we have a question to the audience and would be very grateful if you could answer this. The question is, what is the main reason for carrying out your business in Luxembourg? And there are three answers we offer, which is a product offering, it's a service offering, and the other reasons, like stability, multilingualism, or other reasons. So it would be great if the audience could kindly answer these questions, and then we are afterwards, if you have time, going to analyze the results. Now, before turning to the panel discussion, let me make a very brief introduction, talking about the Luxembourg toolbox, because that is one of the key features and the key points which Swiss wealth managers in particular are very interested in. Luxembourg's toolbox is unique in the sense that it has a specific solution to every situation. The various solutions can be combined. Various solutions have developed over time so that now our toolbox is unique. It is very well tested and very widely used. Now, it would take a long time we don't have, unfortunately, to go through the toolbox. So I just want to very briefly mention to you that we've got investment fund solutions in Luxembourg, which the second panel is going to cover in more detail, from the most regulated funds, UCITS, to the non-regulated funds, the so-called reserved alternative investment funds, reserved to well-informed investors. We have other fund solutions as well, a whole range of different options, which are very widely used, as the second panel will explain to you. Then we've also corporate solutions. So that means setting up a corporate vehicle in Luxembourg, which is itself not a fund. And there we again have a whole range of options, from the so-called SPF, which is a private wealth management company, to the so-called SOPAFI, which is a holding company, to the so-called SES, which is basically a partnership, where we have partnerships with and without legal personality, which are very widely used in the wealth management area, but also in other areas. Last but not least, contractual tools, such as fiduciary contract and insurance contracts and insurance products, more particular unit-linked ones, but that is the last panel, which is going to cover that. So, we will immediately start our discussion. So, Jeff, what does Luxembourg actually has to offer in the area of wealth management?
I think that first, and especially with today's audience, we should acknowledge that the birthplace of private banking and wealth management, as we know it very much, is in Switzerland. I would like to avoid giving the impression that we as Luxembourg have any lessons to give. Our financial center, I think, is built on a different type of foundations and, of course, in a different market and also geopolitical environment, meaning that this had an impact on our product and service offering, as well as the clients we attract, and also the business model. I would briefly like to look at this from two different angles. First, looking at our asset servicing expertise and how that has an impact on private wealth management. Secondly, of course, at cross-border capacities. Luxembourg has always worked with private clients, but the main business in terms of number of employees, assets under management, and also GDP contribution has always been the fund industry ever since the emergence in the 90s. The fund business quickly asked for the development of a certain expertise, professions, and above all, liaising between the different kind of actors. We saw law firms, custodians, fund administrators, management companies emerge, and whereas in traditional wealth management, many services were bundled within one bank, investment funds asked for a separation of responsibilities, risk management, as well as a very well-functioning B2B network. Actors need to be in sync, and I believe that one of the biggest reasons for Luxembourg's success is that we all are in frequent exchange between associates, also between competitors. Yes, of course, we are in competition, but we also have a mutual interest, that is the development of the financial center, as is shown today, but also promotion of our activities in our respective groups. And I think that as we see or look at the disruption of the traditional wealth management chain, the increasing importance of asset managers, family offices, private equity specialists, and others, I am convinced that the B2B network will be continue to be a key factor for the successful development of wealth management in Luxembourg. Secondly, of course, I spoke about cross-border. Our geographical and political implementation in the heart of the European Union will continue to be, I think, the main point of attraction. Yes, there are countries in Europe that have a bigger private banking market than Luxembourg has, but I think most of those markets tend to be domestic. I am convinced that the more important the client's wealth is, the more often we see a demand for cross-border solutions, not driven by tax matters, but by merely the client looking for expertise and a certain diversification. Looking at cross-border private banking markets, I think in Europe we see mainly London, Switzerland, and Luxembourg, and with Brexit, the only remaining provider in the European Union is Luxembourg. And as access rules to the euro market are tightening, as consumer protection is increasing, I am convinced that Luxembourg's importance for wealth management will continue to increase.
Thank you very much. Now, more specifically, what does Luxembourg have to offer for external wealth managers coming to Luxembourg from Switzerland?
The first EAM in Luxembourg were approved at the end of the 90s, so it's a fairly young profession again compared to Switzerland, where we've seen that profession for a much longer time. But I think that the two elements I just spoke about, B2B environment as well as cross-border capacities, are very important components in the value proposition to external asset managers. Nowadays, Swiss independent asset managers, the same as in Europe, are very different actors than what we saw 10 or maybe 20 years ago. Regulation has increased. In Switzerland, FITLAC and FINIC and the new supervision rules have a clear impact on how Swiss EAMs are organized. The one or two-man firms are disappearing, and small boutiques turn into larger investment firms, often having more than 1 billion under management. The first need of those bigger, better substanced firms is to work with a partner network rather than, again, 10 years ago, having one all-inclusive partner where they bought custody, trading, products, research. So they want to diversify into different providers, and I think that translates into a need for e-services, interfaces, risk management, and joining a well-synchronized B2B network. Luxembourg providers, of course, often have an investment fund pedigree and are well used to delivering these often complex services to a professional counterpart. Swiss and other EAM, for that matter, will find experienced custodians and an entire ecosystem of suppliers in areas such as portfolio management platforms, data and document management, or even looking into background and intelligence research. But again, the main attraction point for Swiss EAM will be the access to Europe. For many European high net worth clients, Luxembourg is very much the first place they look at if they want to geodiversify their assets. And as we see that our private banking continues to grow, I think our EAM business is growing even a tad faster than private banking does. But other than clients looking for Luxembourg, the most obvious advantage, I think, is that Luxembourg license allows for EAM to look for clients everywhere in Europe. As an EAM is established in Luxembourg, free provision of services transforms Europe into its home and target market at the same time. A simple notification from the CSSF will allow the EAM to market in any country in Europe he would like to access. Establishing branches is quick, and we see more and more hub and spoke setups where Luxembourg as a headquarter. Many Luxembourg banks also have branches in the European Union, allowing the EAM to one-stop shop different banking jurisdictions with one contact person in Luxembourg. Over the past years, we saw quite a few Swiss EAM that came to Luxembourg, asked for a license, and their names are on the side of the CSSF, and I think there will be more to come to Luxembourg to set Luxembourg as a cornerstone of all European business. And if there are Swiss EAM, we also see that in the market, that do not want to come to Luxembourg themselves. We can see that many Luxembourg-based EAMs, often of Swiss origins, are very open and welcoming to strategic partnerships with Swiss actors.
Thank you, Jeff. So very complete and comprehensive offering, which explains why Luxembourg is a hub for asset management in Europe and for wealth management in particular. Now turning to one of the areas you covered, which is asset servicing, and turning to Stéphane in the area of asset servicing, what does Luxembourg actually offer? What does it have to offer to external wealth managers from Switzerland?
As just being said, Luxembourg has a long experience in private banking and in asset servicing for investment funds. So a mix of the two is available today at the service of the external asset managers working cross-border. So what is our Luxembourg offer? In a nutshell, it's We can offer custody and execution, reporting and tax services, loans, mortgage and Lombard credit, all this through just one contact person or entity. We usually service EAMs from Switzerland that have discretionary asset management arrangements with their clients and which mainly operate under one of the following setups: third-party managed accounts, or third-party managed accounts with a life insurance wrapper around it, or even through dedicated investment funds that is more for the ultra-high net worth individuals. So in practice, how does it work? We onboard a regulated external asset manager. We sign an account opening cooperation contract according to which the EAM represents the end client and carries out, for instance, AML and KYC checks. We open the managed account for the private client. We grant the EAM an e-banking access to manage the client's portfolio. And for life insurance contracts, the process is even simplified as the account opening is handled by the insurance company, who then grants the EAM a discretionary mandate on the life insurance policy. So as a conclusion, the EAM, the external asset manager is based in Switzerland. The account is opened in Luxembourg, and through a Luxembourg custodian bank, the Swiss EAM has access to the world of investments for his end client.
Thank you. Now, what trends do you see currently in the external asset management setup? What type of assets and type of services do you observe?
First trend, like Jeff already said, more and more external asset managers also use Luxembourg as a booking center, so specifically coming from Switzerland, because they want to have access to the European Union. And they are even opening staffed entities in Luxembourg. That's something that we see. And using then a Luxembourg-based custodian. On the type of assets product side, what we see a lot is a growing demand for alternatives. So alternative investments, third-party funds, that has been a tradition always, but more alternative funds, so hedge funds, private equity funds, sustainable finance funds, and so forth, but also direct, a big demand for direct private equity and venture capital investments in the context of a discretionary mandate, precious metals, especially with what has been going on in the last month, the demand for gold as well. That was more on the product side. On the services side, I would say demand for loans, so again, Lombards, mortgages, and so on. Help in the wealth planning and structuring questions, including rent-a-compartment solutions, like dedicated funds, but also public funds. Some external asset managers say, okay, I'm managing the same kind of portfolio for X clients. Why not create a pool in the form of an investment fund to manage that pool more efficiently? And then we see some new needs coming from some external asset managers. Like Jeff mentioned already, interfaces with the custodian bank are required. Special features for the e-banking tool, like rebalancing of portfolios based on model portfolios to help them to deploy their strategy on different accounts. Investment compliance tools as well, to be able to check the compliance on each of the single accounts, transaction and tax reportings, support on the AML KYC onboarding process for the clients. And then we more and more see also external asset managers transferring clients from Switzerland to Luxembourg with existing portfolios. So there as well, migrating an existing portfolio, including private equity funds with already committed funds to that fund. So that is not so easy to do, and that is a demand. And then cross-border competencies in general are largely asked.
Thank you. Thank you very much. Now, turning to Stanislas, now we are going to cover the wealth planning aspect of things. So My first question to you would be, why would Swiss wealth managers come to Luxembourg from a wealth planning point of view?
Good morning, Christian. Good morning to all of you from my office here in Geneva. You know, Christian, I've been active in the wealth planning space for a very long time now. I'm not sure I should be proud of that, but what I observe still today is that wealthy families, mostly European wealthy families, have organized their wealth using Luxembourg solutions since more than 50 years now, and they continue to do so. Luxembourg is still the leading financial center in Europe, mentioned by wealthy international families for organizing their wealth. It's not necessarily the case for managing their wealth. I would make a clear distinction between both of these aspects. And wealth management, I think there's more severe competition for Luxembourg than in organization of wealth and structuring of wealth or planning of wealth. Now, why is that? I've been thinking about this a little, and I think that basically families trust Luxembourg. They also trust Switzerland, by the way. But Luxembourg has a reliable legal environment that is business friendly, but is also regulated quite heavily according to the European rules that gives a lot of consumer and investor protection, and that also creates trust. Also, the Luxembourg Financial Center has adapted itself very well, according to me, to changing circumstances. We all know in Switzerland and in Luxembourg that the environment in which we operate has drastically changed in the last 25 years. The figures that are published by ABBL and Luxembourg for Finance show that the Luxembourg Financial Center has continued over time to perform well, and did so by adapting itself again and again to all these changes of circumstances. You gave an overview of the toolbox in Luxembourg. That toolbox is in fact quite old, and all these tools haven't been created in over the last 3 years. They have been created over time, over a quite long period. And I remember one of the first tools was, for those who are a bit older, is the holding 1929. That was created by a law of July 1929, a law that fitted on half a page of 2 articles. That were nice times. And that has evolved now, the holding 1929 in the SPF. And it was a political will in that at that time from the Luxembourg government to offer holding solutions to investors in different countries around Luxembourg already in 1929, because we had at that time not the framework we have today to avoid double taxation, and that was the reason the holding 1929 was created. In the meantime, we have the SOPRFI, we have a lot of other interesting instruments in the toolbox that you mentioned in your introduction. Very often similar instruments exist in other countries. But it's interesting to notice that Luxembourg very often also was an early adopter. We all know that Luxembourg was the first European member state to implement the first UCITS directive in 1985. We also know that Luxembourg has very rapidly created a powerful insurance legislation that has led over the years to the creation of an important professional community with high standards of expertise. So there are many other examples to give, and we can go on like this, but I think the basic message again is that from a wealth planning point of view, wealthy families trust Luxembourg. There is a solid tradition, there is a solid professional community, a good ecosystem, and there is visibility. With visibility, I mean that families want solutions that last over time. They don't want to be confronted with adverse law changes that are not foreseeable. All Luxembourg instruments in the toolbox may not be the best performing in the world, but they are embedded in a stable and business-friendly environment. So to answer to your question, Christian, as long as clients want to centralize the organization of their wealth in Luxembourg, there will be arguments for external asset managers to be present in Luxembourg.
Very interesting that you started from 1929. You've described the whole environment of trust which has been created, so the toolbox. So Luxembourg has created a very attractive environment and ecosystem. The question now to you would be, do you think this model which we have created is sustainable?
I think it can be, and it will be if the Luxembourg Financial Center continues to innovate and to adapt to new circumstances. Everything evolves so quickly. Let me give you an example. We have all, I suppose, more or less followed the tax adventures of some big multinational corporates such as Google and Apple, Starbucks, and so on. We also know that the fact that these companies manage to pay little taxes in a legal way has led to a series of tax measures for fighting legal tax optimization. And most of these anti-abuse measures have more or less the same methodology. If you want to obtain a tax advantage while setting up one or another structure or an arrangement, you will have to demonstrate that obtaining this tax advantage was not your main purpose while setting up your structure, or that what you have set up is genuine. Genuine meaning here in this context that it has been put in place for what the law says, valid commercial reasons, which reflect economic reality. This is all quite new, and in real life it's all a bit more complicated than that, but generally speaking, it means, according to me, that all wealth planners will have to pay more attention to the substance of these arrangements and companies that are put in place. We will all have to pay more attention to the economic reality and the genuineness of the solutions put in place. We will all have to pay more attention to the fact that companies and arrangements that have been put in place and serve other objectives than tax optimization. These are very important changes. So if we say other objectives than tax optimization, what other objectives would that then be? I would say, for instance, family governance. Arrangements in the framework of the transfer of assets to the next generation. Who is the economical owner of the family wealth on the one hand, and who exercises control? Who is the decision makers? How do I embed in legal arrangements such as bylaws of the holding companies, the types of holding companies you mentioned in the toolbox, or shareholder agreements? How do we embed in this the mission and the vision of a family, the investment objectives of a family? So setting up structures is much more than only tax optimization. And then coming back to the substance argument, it will be more and more necessary that holding and investment companies have a certain level of organization in Luxembourg, be it having their own offices, their own staff, having their assets deposited and managed out of Luxembourg. So, which is then again, from a wealth planning point of view, probably an additional argument for external wealth managers to have a presence in Luxembourg. So, to answer to your question, Christian, I am convinced that the Luxembourg model is sustainable as long as the same sense of innovation and adaptation to new circumstances continues to be present, and that the professional community continues to develop new expertise.
Thank you very much, Stanislas. As we all know, the only thing which is constant is change, and have absolutely no doubt that Luxembourg will continue to be as innovative as it has ever been. Now, it would be interesting to have the results of our poll question. Right, well, 41% of respondents cited stability and multilingualism, 34% the product offering, so I guess it's a toolbox and the products we've talked about. It's actually going up, 37, so I should continue to talk about the toolbox, maybe it's continuing to grow. And the service offering with 23%. So it's interesting, these are comparable ranges and show that there is not a single reason why people come to Luxembourg, but there is a variety of reasons which are comparable and which precisely constitutes our unique offering we have in Luxembourg. So I think we have time for a few questions.
Yes, thank you very much. A couple of questions actually on booking centers. I mean, clearly a subject that you tackled already. But first of all, why would an EAM, external asset manager with a non-EU client base, book in Luxembourg? And on top of that, how much interest do you see in Luxembourg for Switzerland as a booking center?
Gentlemen.
So the first part, if I got it right, was why would a Swiss EAM book non-European clients in Luxembourg? Again, diversification and giving the client access to the toolbox that we spoke about a lot until now. I think that depending on the type of structure a client has, Luxembourg banks sometimes are equipped in a different way and can deal with it in a different way than Swiss banks can do. The second part was, I think, interest vice versa. I think there's massive interest also in Luxembourg and in Europe to book assets in Switzerland. This is, again, very much a question of a complementary offer versus pure competition.
To give an example, in our case, we have decided to book EU clients mainly in Luxembourg, and then we have a presence in Switzerland, and there we are going to book clients from the rest of the world. So there are different models. I can imagine that external asset managers have the same kind of model, booking center A for type of client A and booking center B for other clients.
Thank you very much. Thank you. I think his time is shortly running out. Is there any other question? We still have time? No, it does sound as if not. Then I would want to thank wholeheartedly the panel. It was a pleasure to have this discussion with you. I would like also to thank the audience. Thank you for sharing this half hour with us. Thank you also for responding to the poll question. I wish you a very good rest of the day, and hopefully we will be back in Switzerland very soon. Thank you.
So thank you very much, dear panelists, and I would like then go over to our next panel, which is moderated by Corinne Lamesch, who is the chairperson of the Luxembourg Investment Funds Association, and who will tackle which are the different trends in wealth structuration.
Hello everyone, my name is Corinne Lamesch. I'm the chairperson of the Association des Fonds d'Investissement Luxembourg, and I will be moderating this panel, which will focus on fund solutions in wealth structuring. Before we start, let me do a poll question. So, do you actually believe that Luxembourg is becoming a key domicile for family wealth structuring solutions? I give you time to respond, but I will already take the opportunity now to introduce our distinguished panelists. I have two men next to me which have a wealth of experience in the Luxembourg fund industry and in structuring solutions for investors and also obviously in structuring wealth solutions. So, next to me, I have Serge Weyland. Serge is the CEO of Edmond de Rothschild Asset Management in Luxembourg. He heads the group's institutional fund servicing business, which obviously includes also asset servicing for institutional and asset managers and family offices. To my far left, I have Jérome Wigny. Jérome Wigny is a partner at Alvinger Horst Prussen, and Alvinger Horst Prussen is a leading fund formation law firm in Luxembourg. So as we're going to focus on fund solutions, let me just say a few words on the Luxembourg fund industry. First, I think we can all acknowledge that our asset managers have proven to be very resilient during this crisis. And obviously this was mainly due to the fact that they were able to swiftly switch to teleworking. Let's have a look at our assets under management. Have they suffered? Well, I would say we continue to have quite strong assets under management with 4.6 trillion. We are actually almost back at our all-time high of January. If we look at the Swiss asset managers, they are the third largest group by geographic origin of Luxembourg funds. They have a market share of 14% and manage more than 650 billion in Luxembourg funds. I think, as the previous panel already said, our recent success is also due a lot due to our fund structuring toolbox. And Jérome is going to give a little bit of insight on that. But let me take the example of the Ries, the Reserved Alternative Investment Fund, which is one of the structures we launched in 2016. We already have over 1,060 Ries, and the assets have doubled last year, up to 103 billion in last year. So I don't know, do we already have the poll results at this stage, or should I continue? Okay, so we have 50% who agree that Luxembourg is a good domicile for family wealth solutions, and 42 who neither agree or disagree. We only have 8% who strongly agree. Okay, so I definitely think we have some work to do now here on this panel to give you a little bit about the advantages of the Luxembourg as a domicile. So Serge, let me start by asking you, so why would wealthy individuals and families use Luxembourg for wealth structuring solutions, and also what type of investors do you see?
Thank you, Corinne, and good morning, everyone. I'll try to share the insights of us as a private banking and asset management group and asset servicing. So I think what we're talking about here, and I think it's important to point out, is our wealthy families, ultra-high net worth individuals looking for structuring solutions for their entire wealth. I think that's is also a development that we've seen over the past few years in Luxembourg, that those types of individuals look at Luxembourg for solutions. I think in terms of the key needs of that segment, I think it was mentioned in the previous panel, it's of course wealth preservation, but then there's more and more the transmission element. When you say transmission, it's also about governance, about transparency in the governance of the way you manage wealth, making sure that there are no conflicts, or at least as little as possible potential for conflicts. I think then, of course, comes the component of the management of the assets, and that segment also becomes more and more institutional in their demands, in their expectations, as in terms of performance, of professional management of their assets. So the ability also to access best-of-breed managers, and I think last but not least, the trust element that was mentioned before. A long-term solution, a go-to domicile which has demonstrated a certain level of robustness, strong oversight and governance, and of course, stability, both political, fiscal, and regulatory. So I think those are the key drivers that we see in those discussions.
Thank you, Serge. And so, Jérome, so what structures are being used, and can you talk a little bit about this Luxembourg toolbox?
I'll try not to be too long, because the toolbox, as we've seen, is very big. So the key choice is first to determine whether the fund should be under FMD being the European Directive on Alternative Investment Funds, or whether it should fall outside of the directive. And I'll start with the latter. One of the reasons for avoiding the directive is usually about costs. So avoiding the directive allows you to reduce a certain number of costs. And there are basically three solutions. The first one is an exception of the directive, which is the absence of capital raising because it's wealth of a family, you can disqualify the fund and it becomes a non-AIF. The second option, which is strangely not very well known, is that when you have a Luxembourg fund that appoints a non-European manager, a non-EU manager, then the fund is not under AFMD. And typically, in these cases, one would appoint a Swiss manager. And then thirdly, there's another exception in the directive, which is being sub-threshold. The threshold is 100 million, or for closed-ended funds without leverage, 500 million. That is a possibility I've seen being used by families, but it is less easy because many families would like to have the option to be able to redeem and take away money at any time. And in this category of non-AIF, of funds not falling under the directive, the key vehicle is the SIF, the Specialized Investment Fund. And then the alternative is to fall under the directive. When you fall under the directive, you benefit from a European passport. Unfortunately, that passport is useless in this case because you don't typically raise capital. You just gather money from a given family. But there are two benefits nevertheless. The first one is to benefit from the protections granted by the directive. And there are a number of service providers with specific functions and specific responsibilities, and that enhances the governance of the fund. But the other benefit is the fact that many families prefer being mainstream. They prefer being in the norm, being less visible, not standing out. And of course, if you qualify, for example, in the first option, you're a fund of a non-AIF, it's very clear that it's family money. And others, certain families, prefer not highlighting this and being in the norm. Maybe just a word on vehicles of choice in this category. It is usually the RAIF you've talked about earlier, Corinne, that is very successful, or the Part 2 fund. The Part 2 fund is a more heavily regulated fund. The main advantage is that it is available to less sophisticated investors. And so particularly when in the family there are young children, then the Part 2 fund would be the vehicle of choice.
Thank you, Jérome. And can you also let us a little bit know what is the governance model of those structures? And what are the typical client requirements in terms of governance?
Yes, Corinne, thank you. I would raise two key considerations, and I'm sure Serge will have others at mind. The first one is that usually the family head that decides the creation of a fund wants to keep the family united, or more precisely, keep the wealth of the family together. And they want to manage it as a pool. Of course, there are economical considerations and efficiency considerations. If you have a larger pool of money, you have economies of scale, lower costs, etc. But what we also see is that in a number of cases, the family head doesn't necessarily believe that all family members should have a decision about those investments, and they prefer allocating or centralizing the decision process, especially the choice of managers, the choice of service providers into certain hands, even if the whole family would benefit from the fund. And therefore, to your question, a structure of choice is the SCA, Société en commandite par action, partnership limited by shares, because like in any partnership, you have a general partner and limited partners. The family members are limited partners, and the head of the family very often controls the fund through the general partner. And then the second point I would raise is trust, and Serge already alluded to that. What we see is that in those cases, there is a very strong intuito personae. There's really a strong bond between the family and its service providers, whether it's the depository, the lawyer, the directors on the board. It is a very specific type of client. I must say I enjoy working for families, and usually if you do a good job, they are clients for life.
Thank you, Serge. Anything to add from your side on this question?
I think as Jérome points out, it's always a balance between preserving the family wealth, and very often I think when you talk about those types of clients, I mean those are entrepreneurs. There's a typical people that have typically worked a lot, of course, been very successful, and they're very. It's very important for them to be able to preserve what they've built, and also, as you said, Jérome, try to bundle these assets and make sure that they are managed in a proper way. But at the same time, of course, you have different family members who may have different needs, and that's, I think, where the structuring comes in. To accommodate for those needs, and Jérome will talk about it later. And I think that's very exciting also in terms of the understanding the needs and coming up with the right solutions.
Thank you, Serge. So you talked about the trust in service providers. So who are the typical service providers for those structures, and what is exactly their role?
Mm-hmm. Well, I think traditionally we've seen, private banks or Swiss private banks such as ours be in that market because, of course, there is a relationship there with those investors, and for those banks who have maintained and developed also the fund servicing capabilities, I think that has really paid off today. We see it to be able to offer turnkey solutions. And I would say across I would like to talk a little bit about the value chain, because I think it's also important to point out that those investors are becoming increasingly sophisticated and demanding. And you have to accept also as an organization that you cannot deliver everything, although you may be able to, but you may not be the best one at all the components. So I think if you look at the value chain, there is the structuring bit, what we just talked about, looking at what the Luxembourg toolbox can offer. And this is where typically I think it's the law firm, people like Jérome and his teams sitting together with the client, and very often also the private bank, because they know the client, they know the family dynamics, they may know some stories, because very often it's also very personal. There's a personal component which needs to be factored in to the structuring. So that is the first part of the value chain. Then, of course, you have the whole asset allocation. So once you look at the global wealth of a family, so how does that get allocated? What's the mix between Europe, UK, US, UK now, Asia, equities, bonds, looking at, and that's I think the where a private banker also adds the know-how. Then there are the management building blocks. So I think increasingly we are also looking at families that they want a specialist, for example, for their US equity portion. And typically the ability to say, also as a service provider in Luxembourg, well, you can actually pick, we can even help you pick a US-based manager who are recognized for that and delegate the portfolio management to that entity. And this is where also the Luxembourg toolbox comes in and enables those solutions. And then there is the whole oversight component, risk management oversight of those portfolios, of those delegations potentially, where also the Luxembourg service provider, the management company, this is what we do also in my organization, and providing all the fund administration, depository services, custodying the assets, even though they may be managed by a dedicated manager sitting in another country, inside of Europe or outside of Europe, in Switzerland potentially. So that's kind of the global spectrum of service provisions for such funds.
Thank you, Serge. Another question I have is, we have seen as a fund domicile a huge uptick of the growth of real assets. So what about, so obviously that includes private equity, real estate, infrastructure, private debt. And we have, actually ALFI has published a survey on this in last November, so you can have a little bit of a look out of the really great asset gathering in those classes. So Serge, what trends do you see in asset allocation to illiquid assets? And maybe also Jérome, if you have a view.
Yeah, I think traditionally those families typically have a certain level of allocation to illiquid assets. I mean, I think real estate is the obvious one. Of course, a lot of them are also invested in private equity funds, for example. But what we see increasingly is also the need to embed, sometimes even direct allocations to venture capital. You see, as I was talking about, those are typically entrepreneurs. They like also to be part still of value creation. And so there's also a need to bundle those investments into the overall wealth, and that's where the structuring part comes in. I think, Jérome, you can confirm that.
Yes, I think structure-wise, there is again a choice. The easy one is just to commingle all the assets within one fund or one sub-fund. There's a possibility of creating various sub-funds within a same umbrella fund. Commingling the liquid and the illiquid assets works very well when you only have one member of a family or a handful of members, but it becomes difficult whenever the number of beneficiaries increases. The reason is that each of them might not have exactly the same wish to be exposed to illiquid assets where your money is invested for, say, 10 years or 15 years. And that is why what we often see is to create the creation of separate sub-funds. On one hand, there are often either one or more liquid sub-funds. Some families like to have a separate pool for bonds, for equities, for hedge funds, which allows each family member to decide what their allocation is in those asset classes. And then alongside those, you have illiquid sub-funds for private equity, real estate, and the likes. And where indeed family members take a commitment, they commit to join the club deals and bring money to that sub-fund for a certain period of time, and to be invested into real assets for, say, 10 years or more. So really the choice is, again, either more flexibility in having different sub-funds or pooling everything in one sub-fund, but with a number of constraints.
But is that easy to structure from a regulatory perspective, to have this illiquid? Because obviously they function completely differently. Capital calls maybe on the one hand, others not. So, I mean, is that from a regulatory perspective an easy thing, or do we really need your help to get this done?
I funnily had that question this morning. Yes, legally it's possible. So you can fit, as long as the prospectus and the articles of the fund allow, you can fit all types of strategies into one umbrella. But the truth is that the liquid sub-funds normally function on the basis of a net asset value. So you can subscribe and redeem on a very regular basis at the NAV, whereas the liquid sub-funds need to function on the basis of commitments. And so when you try to achieve both in the same structure, legally, I'm not sure that many people read the prospectus, but legally the prospectus becomes very, it's possible, but the prospectus becomes very difficult to read, unfortunately.
Okay. Well, I think we will have to then consult with you before launching something like this. Serge, is there anything to add about how can we accommodate the different asset allocation and investment needs of each family member in a structure?
I think it is, as Jérome said, I think the trend, for larger families is to have indeed sub-funds by asset class. So you typically have your US equity exposure, your European equity exposure in another sub-fund, your global bonds exposure in a third sub-fund, potentially selecting for each of those sub-funds a specific manager. That can be the private bank, but can also be a third party. And if those asset pools are large enough, you can actually go and source the best and most well-known managers available. And then each family member can then decide on its asset allocation. And I think that's where also it's the combination also of a different set of expertise, coming back to my value chain before. You'll have the private banker or the advisor of that private client, the specific family member advising them on their allocation based on their outcomes and needs for outcomes. So you may have family members who spend a lot of money. You may have others who spend less but would like to invest more, depending on their life cycle. And I think that's those structures enable dynamic asset allocation, including of course, the illiquid asset portion. So I think that's.
I might add that what we also see are private banks setting up their umbrella structure and giving a choice to their clients, either if they invest, say, more than 10 million to have their own dedicated sub-fund, or alternatively, if they would invest less, then the private bank typically creates like 4 levels of risk, with or without alternatives, with more equities or less equities, and then they just invest their clients' money through the structures. That is also something which has become very popular.
Great. So what I'm hearing is there's a huge amount of possibilities and for the needs of everyone. So that's great to hear. So now let's look a little bit at value for money. Some families used to, to use potentially more offshore structures, which were cheaper as well. But we have seen a move to more onshore structures, and I think even also in this segment. So what is the additional benefits you can get out of being in a more regulated, potentially more expensive structure? I can maybe start with Serge.
I think, as Jérome said at the beginning, I think regulation comes at a cost. There are a number of controls and reportings that need to be done. But I think increasingly what we also see is that there is an opportunity to transform those regulatory obligations into added value for those clients. If I was talking about delegation of investment or portfolio management, typically what a Luxembourg-based management company is able to do is actually monitor the performance of those managers, challenge that performance, and use that, because that's required from a regulatory standpoint, and use that also as an input to the family or the family office or the person effectively allocating to these managers as a byproduct of regulation. And I think that's really the trend that we're seeing with regulation that's been in place for a number of years now, and that looks at really the outcomes for the investors. And
Jérome, anything you want to add?
If I may add something, I think that was a great sales pitch, and it's indeed a good way to see it. But I must say, in the past 2 years, what I've seen is that the reason for changing and coming to Luxembourg was usually because it was felt more difficult to justify having vehicles in certain offshore jurisdictions. And so whether the families were based in France, in Switzerland or elsewhere, it is more difficult, even if the money has been declared, justifying that they're based, for example, in the Cayman Islands. And so that has been a very strong driver to be back in the EU.
So more transparency.
More transparency, or because it's the reality, usually it was already very transparent, but it's avoiding being put questions from authorities on why do you have your wealth in those jurisdictions.
Great. I think we did already a great round now. I now would like to see whether there have been any questions from our audience, which maybe something we didn't cover. Natalie.
Yes, thank you, Corinne. Did the new legislation on the RBO, the Registry of Beneficial Owner, have an impact on private wealth structuring?
I think that would be a very good question for Jérome.
Yes, with pleasure. With pleasure is exaggerated, but it's a good question. Because first, I must say it's very debatable on whether it is justified that wealthy people have to disclose their identity and that it publicly be available at the Register of Beneficial Owners. But what we've seen is that considering most families have disclosed their money, they accept it. So truth is that when there are younger children, they try to find ways to benefit from the exemption of disclosure. It is not that easy, but it can be achieved if there are threats, if there are risks of disclosing their names. But by and large, I would say that most families accept the new regimes because it's not Europe, it's worldwide, and then they just accept that their names will indeed be disclosed at the register of beneficial owners.
Yeah, I can confirm that. I think what you see increasingly is, as you say, it's legislation that's in place elsewhere, and I think families have now fully understand that that's the way to do it, and I think there are, as you say, ways to protect some exposed UBOs that can be used as well.
I get here a sign we have time for one more question, but just one.
Yeah, thank you. So what about GPLP structures as CSP for family offices? What's the added value for that?
Jérome, I think. The acronym alone, I think.
Yes. Well,
good for you.
The person who asked the question spotted that I didn't cover them in my toolbox, but indeed they are a very valid instrument. I see them slightly less used, but they could be used in particular because they have a big merit is that they're zero tax. All the other structures in Luxembourg are lowly taxed. They have a tax that is between 1 basis point and 5 basis points per annum, so on net assets, so it's fairly low. Partnerships have zero tax, but in most cases families find it difficult to deal with transparent structures, and a partnership is a transparent structure. So they prefer investing into a corporate.
Okay, I get the sign. We have no more time left for additional questions. Thank you very much for joining us in this panel on fund solutions for wealth structuring. And I think we got quite a lot of insight here. I think my big point, which I would take out of this, is there's lots of choice, lots of possible structures, and also the individual structuring need of each family and even individual family members can be taken into account. So I hope that convinced you that we have some stuff to offer here. Let me now hand over again to Philipp.
Well, there's nothing really more to say to your concluding remarks. Corinne, thank you very much. Serge, Jérome, thank you very much for being here.
Thank you.
So this brings us to our last panel on life insurance, which will be led by Marc, who is CEO of the Luxembourg Insurance and Reassurance Association. And he will try to answer the question, life insurance more than just a wealth or structure planning tool.
Good morning, everyone, and welcome to this last panel on life insurance. My name is Marc Hengen. I'm the CEO of the Luxembourg Insurance and Reinsurance Association. I'm happy to greet also today my fellow panelist, who is Luca Bertacci. Luca joined Lombard International Assurance in 2011, and he's the country manager for the Italian market at that time. Now, as Global Director, Head of Strategic Partnerships and Switzerland, Luca spearheads the development of Lombard International institutional partnerships across all geographies, in addition to driving the business ambitious growth plans in Switzerland, and so supporting its multidisciplinary team of experts across the company's 3 hubs in Zurich, Geneva, and Lugano. So welcome everybody on this webinar. Before diving into the discussion, let me show a couple of figures about the Luxembourg insurance and especially life insurance market. So one of the really important thing is that it's a growing sector, and we were having 2019 premium income of 28 billion euros is it here on this slide. And which is quite an important figure for such a small country as Luxembourg is. So where are these clients sitting or living? To put it better, so 90% of these 28 billion euros are paid by clients who are not living in our country, so collected outside of Luxembourg. And out of these 90%, these people live in more than 40 countries, mostly around Europe, but also in the rest of the world. As from an assets under management point of view, we have figures of 2018 here. So Luxembourg life insurers have a deposit 149 billion euros as of 2018. The actual figure is roughly 200 billion euros as of 13th of June of this year. And the pie here shows the split up by nationality of the custodian bank, and you see that Swiss banks are account for 18%, so number 2 of the custodian banks. So, with these figures in mind, let us now dive into the discussion with Luca. And Luca, what are the needs of Swiss wealth management partners and, of course, their clients? And how can Luxembourg Life Insurance offer solutions? Perhaps it's easiest to start off with the clients. So, Luca.
Thank you, Marc, and thank you very much also for putting our speech at the end of this food session, because I think today we had a very interesting overview and panorama of what Luxembourg can offer. And the question is more than just a wealth and structure planning tool, insurance. And that's absolutely the case. I'm now in Zurich in our offices, and all the things have been said today by Mr. Gramegna about also digital needs and the transformation that Luxembourg is doing by all the speakers talking about, I go quickly, Jeff talking about cross-border, that probably is the main needs for clients and partner here in Switzerland, access to Europe, because the regulation is becoming more and more complex, and this topic has been repeated several times, and we talked about family trust and trust in Luxembourg, how Luxembourg can be used as a trust, let's say, hub. And the topics have been really, really interesting. What's the client needs? I mean, as you said very clearly, insurer in Switzerland help partners and clients mainly in cross-border activities. And cross-borders means not only European cross-borders, but also international cross-borders. And this is becoming more and more important, and possibility for those clients and capabilities of having everything structured in easy tool. And again, we go back to the last panel talking about how can you structure alternative and difficult funds in something that can be useful for and for the family and easy to manage in just one tool. Then I think at the end of the day, this is where really is the real need for clients in Switzerland. Having a tool that allow their manager and trust manager that often are in Switzerland and the bank that offer are in Switzerland, because I mean we work with a lot of custodian banks in Switzerland. As you said, the custody in Switzerland is in any case very important for Luxembourgish players, and investment manager and external asset manager, they are often Swiss external asset manager, they like to have access to European hub from from Luxembourg. Then again, I think cross-border simplification and wealth planning in an organized way is definitely what are the needs of our clients in general in Switzerland.
Thank you, Luca. Now let's perhaps pass a couple of words regarding the products, the Luxembourg life insurance products. Can you point out a couple of characteristics which are convincing your partners, especially in Switzerland?
Absolutely. I mean, in the last 30 years, we were able as an industry, and you know better than I do, to build something together with our regulator, Commissariat Assurance, that has been is really appreciated cross-border in Europe, but in particular in Switzerland for let's say, again, I go again on the word of easiness of use and the flexibility of use. Then on one side, the clients can invest in a European framework that grant a lot of advantages that are not only tax, but principally family, well planning, well structuring advantages that are linked to the EU directive. But at the same time, they have the possibility to be protected in AAA vehicle, because we remember the structure of we had what we call the triangle of security with custodian banks and a framework, a legal framework granted by our authority. And at the same time, we can go further and further in let's say challenging complex asset allocation within the policy that must be obviously fully transparent, transferable, and structured properly, but through the rules and the regulation, we can really solve a lot of issues that often even investment managers have, because obviously they get those problems from the clients. Then again, we can provide an easy EU door, an easiness in structure. And I would add another point is digitalization, because Luxembourg companies, they invested more and more on that. And I think we will go back to that.
Okay. Thank you, Luca. But one point I would like to also stress here is what happens if the client changes from one country to another or moves out of Europe, or part of the family move out of Europe. Can you give an answer to this quite frequent situation?
Absolutely, and this is one of the topic. As I said, the cross-border is one of the topic key for our product as an industry, because we have a compliance contract for all the countries across Europe. Then in this new world where children are working or studying in different countries, and all people are moving, retiring from the Nordics, Sweden to France, then is important that the contract is flexible in such regard. Then it's easy to move without making any change. Then keeping the same investment manager, the same custodian, is easy to adapt the contract for these needs. And then this, as you can imagine, is another simplification, very important.
Okay, thank you, Luca, for your explanations. I would now like to launch a poll to the audience so that we could check what the audience think about it. So, is Luxembourg life insurance a tool that will increasingly be used by international clients in the future? So, we let a couple of seconds to the audience to give us some feedback on that question, please. Okay, perhaps we come back to that after the next explanations given by Luca. So everybody knows that we are now living a crisis and an unprecedented situation due to the pandemic. It's not easy to go and see partners because of travel restrictions and all the difficulties everybody knows. So what are the challenges and the solutions brought by the insurance companies to that specific situation, given also that, for instance, between Luxembourg and Switzerland, there's at least 400 kilometers.
Yes, yes, and actually this is also increased by the fact that the clients don't travel anymore to Switzerland, and then sometimes also the banker or the banks, the family office, they have problem in communicating with their clients. Absolutely. I think here this pandemic situation that now started more than 6 months ago, but will probably last for other months, looking at what is going on in Europe and in the rest of the world, must be an important driver for the strategic choices for partners and for insurance sector. And we were, as an industry, very, very smart. I mean, we moved in few weeks. Most of our companies around Luxembourg were able to move in remote and maintain a full set of maintenance and services. Then I don't recall a problem in terms of really managing surrender, change of managers, change of custodians, that are very important in this industry. Then on one side is the digitalization of the operation, the continuity plan that we were able to put in place. On the other side, as you rightly said, we have to cope for the future and also help the industry in growing. And in such regard, we as Lombard, but in general, the industry was very smart in going for distance selling and helping with digital onboarding to support the bank's family office across Switzerland to contact their clients in a way, and also increase this safe product. Insurances have been requested more and more in the last month. I mean, clients were sat in their sitting room and thinking, what do we do? How we can plan our wealth for our kids, for our families? And again, I think we were able to cover all these points very smartly from a digital point of view. And this is where I was more impressed. I didn't think even, I must admit, that we could have been so good as an industry moving in that direction. Then it's good.
So it's good to hear that industry was prepared, but partners and especially clients, were they prepared as well? And how did they react to this new way of getting or being in contact with the wealth managers? Or did they withdraw their money because of the pandemic? Or how did they react, clients and partners, to that specific new way of doing business?
I must admit again that even our partners surprised us in an incredible way. I mean, Swiss banks that are known to be thoughtful in changes with operational things, in particular when we go there for operational topic, opening accounts, that often can take a bit longer for several reasons, also because we have to be careful. On the other side, in this situation, we're very, very fast in moving to a paperless structure. Then we started working really in a smart way with most of our partners, I must admit, even small banks. Then partners definitely were, let's say, reacting and acting in a similar way, like our Ministry of Finance said on the rules of pandemic, but also internally in the industry financial sector. For clients, is a bit different, I think, story. If clients have to make a change in their mind, when you do a distance selling, let's say, proposal to the clients, the fact that you have to record some situations, are, they have to come in the mind of the clients, as you can imagine, but it's moving quicker and quicker because everybody is in this new world. Then I think the future will be there. And as the last question, the value for money question on the last panel, I totally agree on the point that this new regulation and European change is an opportunity. Because in this situation we can really act and move within the EU directive and the new regulation in a very, very good way, and support our way and support our Swiss partners and clients.
Thank you for your explanation. So under difficult circumstances, you did the best what was possible to serve and continue serving clients and responding to clients' and partners' needs. So this panel this morning was about wealth management, and of course Luxembourg life insurance is one part of it. And a question which goes around is also, can a Luxembourg life insurance contract be combined with other structuring tools, perhaps those ones treated by our fellow colleagues before us? Can you give us your view?
Yeah, it was a very, very interesting panel, the last one, because most of the questions and the topics that were raised are questions and topics that our specialists within our industry, let's say, tackle every day. Definitely, yes. Again, our regulation allows us to manage in a very smart way alternative assets, non-traditional assets, venture capital, putting that in a framework of wealth planning, long-term wealth planning. Then you can manage capital call, capital release within the policy in a very smart way. And together with this as a tool, you can also combine very well with the trust or with different, let's say, structures that are obviously different for different regulation and country. You have Société Anonyme, Società Semplice, structure different in Spain and in the Nordics. But at the end of the day, some of the needs that you cannot cover in within the insurance structure, you can definitely cover if you put one of those structures as a beneficiary or as a policyholder. Then is an incredible set of tools and possibilities you can play there.
Thank you, Luca, for these explanations of the important role in the toolbox of the Luxembourg Financial Center. And I would like now to come back to the results of the poll we just launched and which we could comment with Luca. So I think Luca did a good job, because 78% of the respondents think that there's a bright future for Luxembourg life insurance. Perhaps also let's have a look at the unconvinced, which say no. It's 22%. Perhaps would you like to do any comment on that no?
But again, I don't know. You should see the granularity. I will be more than happy to go further with my partners if somebody has a doubt on that. Obviously, again, insurance have to move on the right path, on the right framework in a world that is more and more transparent and structured properly. Then not always you have to use insurance, but the good thing is that you can use insurance always with a lot of other structure, as we said. Then it's an interesting answer. I'm happy about the almost 80% that are convinced that we can support our partners and our clients, actually.
Okay, thank you, Luca. We have a couple of minutes left to answer or to have a look at the questions the audience was able to ask for now. And perhaps did we get questions?
Yes, so maybe one on quite a hot topic, private equity. So how can private equity be integrated in a life insurance contract, and what benefits does it have?
I think, Luca, that's one for the specialist.
That's a very, very, very good question, and it's something where we actually study, work with our partners and clients in ages. If you think now private equity and in general investment in real life are part of all the asset allocations of every institutional, but every family. If you think that even retail pension fund have up to 20-30% invested in those kind of assets, you understand how this is important and actually is protecting the interests of the clients, because we are talking about long-term product, long-term investment within a whole life product. Then what's the best tool to invest in private equity if not that? When you put those investment in a good equilibrium of wealth management and also liquid assets, they allow you in a moment where it's very difficult to understand what will be the next crisis, credit, equity, and everything, to have a smooth impact and a much more decorrelated portfolio. Then I think is vital, and I think our industry is ready to give the best answer in such regard.
Okay, thank you, Luca, for your very important explanations. And Natalie, do we have another one?
Well, let's say maybe one last question for Luca as well. Where do most of the international clients who have assets in Switzerland actually come from?
That's another very good question. If you look at the statistics in the last let's say 10 years, you see that Switzerland is always at the top in terms of cross-border, let's say, financial market. But if you go careful and go country per country, you see that a bit European clients reduced, but we have an increase of inflows coming from Far East, Middle East, what they call Middle East and North Africa, MENA, even Russia and STAN countries, US, because you will not believe that, but there are a lot also of citizens and or residents with money there, and certainly LATAM, that is a growing part. Then is still growing. The asset within, let's say, the financial sector in Switzerland is a bit changing the composition.
Okay, thank you, Luca. I think Natalie has said it was the last question, and if I look at the time, it's almost running out. So from my side, I would like to very much thank the audience out there around the world on the web, and also especially Luca, thank you very much for your explanations, and thank you Luxembourg for Finance for putting up this webinar. Thank you very much.
Marc, here in the studio, Luca in Zurich, thank you very much for your insights on this very interesting topic. So in the last 1 hour and a half, a lot of questions has been answered on the Luxembourg solution in wealth management, especially also on the life insurance, the Luxembourgish one. In case questions remain, please don't hesitate to contact us. And this brings us to an end. I would like to thank all the panelists very much. I would like to thank the Chamber, the Luxembourg Chamber of Commerce, which is hosting our studio. And of course, I would like also to thank the technical team of the Broadcasting Center Europe, who make this all possible. And I thank you, dear audience, for staying with us. And I already invite you to our next Focus On in October on the subject of Brexit. Stay safe wherever you are.